One of the reasons why I've been highlighting that I've been bullish on SoFi stock has been the company's shift towards a more asset light, lower risk business that is more attractive to someone like me that considers the return on investor capital, the risk on my capital. And so I've appreciated how SoFi's management team has taken the company down a path of lower risk while still maintaining top line growth. So I wanted to talk a little more about that in this video and some other factors about SoFi that I think you should know. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So the management team highlighted that an important driver of the acceleration in revenue growth was the increased contribution from capital light non-lending as well as fee-based revenue sources. And those capital light sources or the asset light sources, that's one of the benefits as well. Not only is it lower risk, but simultaneously it expands growth opportunity because you're not weighed down by capital needs. Sometimes you have an opportunity in front, but you can't capitalize on that opportunity because you don't have the money to capitalize. And so, if you have an opportunity that doesn't rely on having money to capitalize, that opens your opportunity set to a larger degree because money is not a requirement for that opportunity. And for a bank, that's important because a lot of the business does require money. A lot of lending does require money. So if you can offset some of your reliance on capital by having access to these broader opportunity sets, then that's great news for investors. SoFi's management team also said that improved monetization continues its strong contribution to revenue growth. Financial services revenue per product increased from $59 in the first quarter of 2024 to $88 in the first quarter of 2025. So they're adding new customers at record rates for SoFi. But on top of that, each customer is engaging with the platform more frequently, and each customer is becoming more profitable for SoFi. So they've got the 1-2 punch going where they're adding new customers and they're moving customers along the funnel and increasing the revenue per customer as the customer matures with SoFi and discovers all of the various financial products SoFi offers. They expand and deepen their engagement with SoFi. So I found this data point very interesting, and SoFi highlighted how much money it made off of the third-party loans it originated. So these are loans that SoFi made for sale for someone else. They had no intention of keeping these loans that they were making. And this is their third-party loan business, which has been growing meaningfully. Demand for this product is really strong. Lenders are very interested in making these loans because they find the interest rates they're getting as being very attractive in terms of their opportunity set for what they could do with money. They think making personal loans is a great category right now. So SoFi made $1.6 billion worth of these types of loans for third parties, and they generated $93 million on that work. Or, as you know, they also made some referrals, but they still were able to generate $93 million in this revenue segment, which is more than 5% profit on the total loan value. And I think that's a great number for SoFi, especially because that's a customer that stays with SoFi. That's a customer that SoFi is likely to service the loan on. So that customer communicates, engages with SoFi, and there's a chance that customer adds different products and becomes even more profitable for SoFi longer term. In fact, they said that this third-party business generated $3 million from servicing cash flow, which is recorded in their lending segment. This growth opportunity for the business continues to be strong. So I like that from an investor perspective. for SoFi to have this opportunity, and the opportunity keeps increasing. You've heard the announcements SoFi made with Blue Owl Capital, with Fortress, and adding billions of dollars in capacity secured for this type of business is something that demonstrates the strong demand from investors. And I'm seeing this not just from SoFi, but also when I evaluate another company, Upstart, which is also focused on personal loans. They've done great business in this category, and they've seen demand from their lenders also increasing on their platform. So it's not a SoFi specific factor. This is an industry specific factor that SoFi is benefiting from. And I tend to see those as more lucrative longer term, especially because SoFi is growing faster in this category than rivals like Upstart that I mentioned. So this is an attractive opportunity set for SoFi and its investors. So let me remind everyone that I do have SoFi stock rated as a buy. I've had SoFi stock rated as a buy all year long in 2025. I predicted or forecasted that the stock price could reach between $20 and $22 by the end of 2025. I made that prediction on May 13th, 2025. I updated my latest buy recommendation on SoFi on May 22nd, 2020. My proprietary discounted cash flow valuation model for SoFi stock has the business worth $20 today. The current market price is $13.21. So I see undervaluation in SoFi stock, and I see an opportunity to increase that valuation as the company grows its business and risks lower or de-risks itself with these asset-light, capital-light growth initiatives. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.